Risk appetite is back in the market and gold slides this Wednesday. Does the metal still have a chance to move higher? Joining us now from the CME is iiTrader's Bill Baruch. Bill, thanks for being back with us.
Thanks for having me on today.
So despite what we're seeing today, gold is still up on the year, also still above its 50-day and 200-day moving averages here. Does the metal still have legs, Bill?
Yes, I think it does. And this is just, well, a sharp correction, but a consolidation back lower. We're seeing this 1220 area down to 1210. We need to watch it to be supportive. It's going to be crucial if gold can hold this and really start to build support off of it. The market got overbought. We've seen longs, the managed longs, speculated longs, all have increased positions and really meant that this market was topped out. Everybody who wanted to be long had already gotten long. And then as well, with the awful news in Brussels, the market could not break out and extend further to the upside. And that as well opened the door for profit taking and selling. So what we're seeing is this move lower, sharp correction today, if you will. But I think there's a lot of support at the 1210, 1220 area. And if we don't break down through there, look for this consolidation off of here as well to help lift the market. Another key factor, too, is option expiration on Monday for the futures contract. And yes, as you mentioned, this has been a very great start to the year. April futures are a big contract for gold, and the options expire. There's a lot of open interest in the calls, and that has, I believe, kept the market in check as well, and as well encourages volatility ahead of that.
Well, Bill, we saw investors get out of volatile stocks and flock to gold since the start of the year. So with risk appetite slowly creeping back, are you concerned for the metal, though?
You know, I'm really not. I mean, here's the thing. Earlier in the week, last week, we started hearing rumors from the Fed talking. Well, last week they didn't hike rates, and gold shot up. But this week, the Fed's members are talking again, and it's really made the April meeting look like it's on the table. Possibly June meeting as well, or likely June meeting to see a hike. That has hurt gold as well. So, as well as that continues to be talked about. As you mentioned, the risk appetite for equities, that's going to start to bring a little bit of a fear trade back into the equity market. And I think that as well is going to help gold at these levels. Here's something to think about too. As after the December rate hike, we've seen the dollar decrease more than 3% to where it is roughly today. So it doesn't mean that the dollar is going to excel higher just because they're hiking rates. We could see a slowdown in data. So there's a lot of possibilities from there. Now, even though we do hike rates, it's not really about our interest rate as much as it is about yields. And the real fundamental backdrop around the world is yields are going lower. We're seeing from the ECB, from the Bank of Japan, we're seeing negative interest rates around the world. So we're going to see a flocking to U.S. Treasuries. So the Treasury yields, which the 10-year yield failed at 2% and has retreated ever since the Fed meeting last week. So as yields in the United States move lower, it's going to continue to make gold attractive.
All right, Bill, before I let you go, quick thoughts on silver, which is also down on the day. How do you see it here?
Well, silver as well failed at the $16 level. The commitment of traders has shown a very bearish pattern with the commercials, though as well the speculators have been long. I think this failure at the $16 level has brought this market back. There's some trend line support down here. I think as well as gold, look for it to consolidate, and I think over the next couple months we're going to see both gold and silver higher than here, and gold making a run at 1,300, while silver again at $16 and above.
All right, Bill, good thoughts from you today. Thanks so much for joining us.
Thank you.
And thanks for watching this edition of Kitco's Gold Report. We'll see you tomorrow.